Hey folks, Dan Frio here, the rate update. Today I want to talk about what's going on in the markets. You're going to see the stock market kind of crumbling. You're going to see mortgage rates going up. I'm going to tell you why, because I pre-warned everybody not too long ago when the government started printing all this money and everybody thought, they're like, that's not going to happen. You're fear-mongering. Well, guys, it's coming true what I predicted then. I hate to say it that way. So don't go away. Find out what's happening in the economy that's going to be causing some issues. Don't go away. Okay, so what the numbers came out today and said inflation is blowing up. And the Fed is trying to make it that the inflation numbers are just going to be temporarily. They're going to spike a little bit. They expect it in the mid threes, but they were higher than that. And that's spooking the market. Why? Why is inflation a big piece of this process, and why do people care about it? Well, it basically makes things more expensive, okay, for everybody. So let's say, for example, you're a company. It makes everything more expensive. Your materials, most likely your labor costs, and a bunch of other things. Now, on top of that, we're going to have the Federal Reserve or the Fed coming out, or the government coming out, I apologize, raising corporate taxes. So they're wanting to increase minimum wage. They're going to increase taxes. And we got inflation that's increasing all the products and materials that go into things. What's going to happen to companies' profit margins? They're going to shrink, or they're going to have to then increase their prices, thus pushing inflation even higher. So guys, it's going to be just a one big spiral, and I've been saying that for the last couple months, and everybody's like, "Oh, you're just a dooms and glooms guy." And then I also said that with the new stimulus package that was just sent out, paying people money for not working and now compensating people all the way through almost the end of the year for not working, that's going to come and bite us in the butt as well. So let's go to some headlines to see, was I right or was I fear-mongering? Well, let's find out. So the first thing we come to is Wall Street in the red because of inflation jitters. Okay, that's going to be the headlines right now. That came into play a couple months ago. Then it subsided because the Fed kept coming out saying, "Oh, just relax, everything's going to be okay." Well, guys, it's not going to be okay because I just laid out why things are going to get more expensive. Okay, the next thing is the Jolt Index came out yesterday. And Jolt is basically, it's showing how many job openings there is. Okay, Biden's unexpected job problems. Now, guys, this isn't a political channel. I'm not blaming an administration, but I said this from the get-go. If you're compensating people for staying home, you're not going to be able to get them to work, especially if they're making more money staying home. So we scroll down and it's like, okay, so let's see what's happening here. A government survey of employment turnover, known as Jolt, found that there were 8.1 million unfulfilled jobs in March, the largest number since the survey began in 2000. Why? Well, small companies can't get anybody to work. Restaurants can't get anybody to work. Retail can't get anybody to work. If you're making minimum wage at one of the fast food companies, why work when you can make more money staying at home? Guys, it's going to affect us. The next piece of the puzzle, we went to Yahoo Finance, Wall Street in the red. Let's go to the next section, CNBC. Why? Inflation speeds up in April as consumer prices leap 4.2%. Okay, the consensus vote, or the consensus out, the economic calendar, let's go to that. We're going to see monthly rollover, no big deal. Consumer price index, month over month. We were last month, we were at 0.6. The consensus was we were going to be at 0.2. We're at 0.8. 4 times what the consensus was on the consumer price index. That's month over month. Let's go year over year. We were at 2.6. I said that we were going to be in the high 3s. We might top 4. People thought I was crazy. The consensus was 3.6. We came in at 4.2. Nailed it. Okay, I wish I didn't, but I nailed it. Now, is this going to be short-term, long-term? I don't know. But here's my consensus on this. Here's what my thoughts are of what's going on there. Nobody's going to work until their unemployment benefits lapse, okay? And they're Hopefully we don't do another round of stimulus, because that's only going to dig a bigger hole for us. But once the stimulus stops, people are going to be forced to go back to work and starting to make their normal pay. That pay is also taxed. A lot of this unemployment benefits, a lot of people can have that, elect to have that non-tax, so they're getting cash. When their tax bill, or they have to do taxes next year, they're going to be shocked that they're going to owe a bunch of taxes because of that. So that's going to create some problems, and that's going to pull back some spending at the end of the month, because people's incomes are going to start to drop, because now they're back to work making less and it's taxed. And then we fall into the beginning of 2022 when people are going to get their tax bill saying, oh my goodness, I owe taxes because I got all that money last year tax-free. That's going to subside and pull a lot of money out of the system as well, thus bringing back inflation to normal levels. But I don't see that until the end of the year and the first quarter of next year. So that's the whole premise behind the video today. So please leave any comments you have down below. Subscribe to the video. Hopefully you give me a thumbs up because you like my channel. Hit the bell down below so every time I post a video, you get an alert. And please don't forget to subscribe. But I'm not trying to be a dooms player in this. Let's focus on what can work for you. Well, the infrastructure bill is where I would focus my money on in stocks. But trickle your investments in slow by slow. What I mean by that is, would I jump into the market right now with all 12 feet and buy up the market? No, because I think the market's going to continue to drop a little bit. We had, I think, almost of 800 or 900 point loss since yesterday. So within the last 48 hours, we saw that really pull back. So let's see where we are with our stock list now. So these are the list of stocks on my wish list. Most of these are companies that I own and or watch meticulously to try to find a good entry point. But you see a lot of the big companies, the staples, Google, Apple, and Facebook, they're all down, almost 2%. Okay, so that's not working. I always say Berkshire Hathaway, that's the place to be instead of having your money in a savings. If you don't like the rock and roll of the stock market up 10% yesterday and plummeting today or whatever, and you just want solid returns, Berkshire Hathaway is the way to go. I'm not a financial planner. I'm not a stock investor for your behalf. I do this to help educate you guys and entertain you guys on stocks, crypto, real estate, and bonds. I'm just showing you what I do. Do your own research before you invest, but I'm trying to give you some sweet spots in the market. Berkshire Hathaway is a place where you just stuff your money and don't worry about it. Come back a year, 2, 3, 5 years from now and see how much money you got there. You'll probably be very pleased on the returns. Cryptocurrency is doing very well, and I'm adding to my positions on a pullback that we saw yesterday. But you can buy Bitcoin, Ethereum through stocks, and you can buy it directly through other companies such as Coinbase, PayPal, and other things. But right now, I have my highest or largest position in Ethereum, and it is on a tear right now. It's up 7.5% today. Okay, you sell the market, the stock market is, where is the stock market? It's down almost 500 points, but my cryptocurrency's putting me in a nice little sweet spot here. So that's working, as well as Berkshire Hathaway. We go through here, and there's basically nothing else really working. The XLE, which is the energy sector, because people are moving into dividend stocks. Energy is a good place to put your money for dividend stocks to subsidize your income. So you get good yields on these stocks, plus you're looking for the appreciation in those stocks. So right now I am focusing on the cryptocurrency. I'm really not adding, I'm only adding there in pullbacks. I'm putting the brunt of my money into Berkshire Hathaway right now and in the near future, because I'm looking at pullbacks in the market. And energy sector, the energy sector ETF, which is XLE. A lot of these X's down here, I mean, they're in the ETF, which is a basket of stocks that you could buy in each one of these sectors. The energy sector, the financial sector, the technology sector, and the semiconductor sector. I also been adding to my positions in the industrial sector, and this is where I would monitor if I was you guys. I would monitor the XLI. It's the industrial sector that should really take off. The infrastructure bill that the Biden administration is trying to work on right now. Do I think it's a good thing right now? No. Do I think it's a good thing to raise minimum wages right now? No. Do I feel that they should increase taxes, especially on corporations and individuals right now? No. It's not a political issue. It's an economic issue right now. And that's what the channel is about. I want to take politics out of it. What's going on in all the cryptocurrencies right now? Well, Bitcoin is the household name and Ethereum is becoming the household name. But look what these have done in the last 24 hours in the last week. Bitcoin is up 1%. Look at Ethereum, it's up 30%. I hate to tell you guys, but I've doubled my money in the last 45 days in Ethereum. So don't mean to rub that in, but this, if you've been monitoring this, this is the place to be. Let me explain what this does. Ethereum is the platform that a lot of these cryptocurrencies trade through. So every time there's a transaction, you buy or sell Bitcoin, you do it through the Ethereum network, they make money. You buy Bitcoin cash, it goes through the Ethereum system, they make money. You buy a lot of these other cryptocurrencies, it goes through the Ethereum network and they make money off it. So if you don't know anything about cryptocurrencies, please study or look up Bitcoin and Ethereum. And those are two investments that you might want to just put some money in there, a small portion of your portfolio, leave it there and don't look back. Okay, because it'll drive you nuts on a day-to-day basis. The economic news today, the rest of the day at noon, we have a 10-year Treasury auction. I'm going to really pay close attention to that, what's going on, because that is going to show us how much enthusiasm there is in the bond market right now. Tomorrow we continue with producer price index, month to month, and year over year. That is also a trigger and a monitoring system to see what's happening with inflation. We also have initial jobless claims tomorrow. I don't think it's going to be a good number. Continued jobless claims, not going to be a good number. Why? Well, right there. If you're paying people to stay home, they're not going to go to work, especially if you're paying them more money. Now, I know, guys, there's a lot of people out there that are surviving off of this. But what this tells me is there's 8 million job openings out there. 8 million. Why aren't people working? Okay, and that's the up for debate. So let's go on to what's going on with the mortgage rates today. We follow this, and people follow me on a daily basis, and they follow this number right here. This is what's happening to the MBS markets, and it's crumbling. When I do this on a daily basis, and you want to learn more about mortgage rates and how they work, and how they function and how we monitor them as a lender, please check my channel at 5 o'clock tonight. In my channel is this, the rate update with Dan Frio. I have close to 900 videos. One gets posted every day at least. I try to do this morning update or the opening bell with Dan Frio as much as I can, but the mortgage business is really busy and I'm trying to make it pertinent to you guys on how you can make money in real estate, cryptocurrencies, watch the bond market, what stocks to buy and so forth. But check out my YouTube channel, give it a thumbs up, subscribe. I'd love to have you join us. I'm a mortgage lender. I've been doing it for 33 years. If you're needing to refinance or buy a home, please reach out to us. There's a mobile app right here that you can click. It basically puts everything in your fingertip. I can get a pre-approval to you probably within minutes, okay? And we're licensed in about 40 states right now. So if you're anywhere out in the country, we can probably help you. If you'd rather call us to discuss with somebody personally, call 844-775-LOAN. Or the next best thing, what a lot of people are doing right now because of their time at work, or you got to take the kids to soccer or this and that, and you just don't have, during the day you're busy, but you want to customize a time to reach out to us and talk. You can pick a 15, 30, or 60-minute consultation, click it, it'll open our calendar, give you all the dates and times available. So let's say you can talk tomorrow, you click tomorrow, you pick a day, a time that works for you. I'll get an alert, you'll get an alert, and then what we'll do is we'll call you during that time or Zoom you or Skype you. However you deem fit, the best way to do that for you. So that is it for today, guys. I'm not trying to be a dooms and glooms guy. I'm trying to find you pockets in the economy, in the industries, in the Dow, and everywhere else, and how you can be financially set for life. So that's it for today, guys. Please leave some descriptions below. Let me know some questions that you have. Let me know what your thoughts are on the housing market and the employment market and the stimulus packages. I'd love to hear from you. So God bless, guys. Take care. I'll see you at 5. Bye-bye.